Okay, yeah, let's go on ahead and begin. So, good afternoon, everybody, and welcome to today's REF webinar. On behalf of the REF Group and Real Estate Forum, thank you for joining us today. And at REF, our goal is very simple: to bring people together, shaping and building the future in real estate environment, so they can make smarter decisions, build faster relationships, and create a healthier real estate ecosystem. And this means connecting owners, developers, investors, contractors, and advisors, and industry leaders around conversations that actually move business forward. And today's topic is especially important because in construction and real estate, growth without financial clarity can get very expensive very fast. And the businesses that win are not just the ones closing deals or starting projects, but the ones that understand their numbers, communicate performance clearly, and stay ready for lenders, investors, audits, and opportunities. And today, we're honored to have Debraj Hazra and his partner Anil with us today. And Debraj Hazra is the managing partner at Fin Audit CPA and has more than 15 years experience and brings deep expertise in financial reporting, SOC audits, US, GAAP, IFRS, mergers and acquisitions, accounting, lease accounting, revenue recognition, IPO advisory, and cross-border transactions. Fin Audit CPA focuses on audit, cybersecurity, and compliance services globally. Debraj, thank you so much for being here, and Anil, and for helping our audience better understand how financial reporting can protect profitability, preserve legacy, and position construction real estate businesses for long-term success. So I'll let you take it away.
Yeah. Thanks, Lillian, for the brief introduction. Yeah. And it's really a pleasure to be here. Okay. So I'll start my presentation. I'll share my screen. Okay. And then we will jump with the presentation with the intro from our side for me and Anil, and then we will dive into the presentation. So
yeah. Your voice is low, Deborah. You might need to talk a bit louder.
Okay. Is it better now?
Yes.
Okay. Sorry. It's just start of the meeting. So yeah. Yes. Can you all see my screen?
Yes.
Can you all hear me okay?
Mm-hmm. Yes.
Okay. So again, today's agenda, we are going to talk about today accounting and audit essential for real estate professionals. Okay. So we're going to touch briefly about what are the cash basis of accounting versus accrual basis of accounting, and what are the financial impact, what are the internal control they should have in their business. And next step, again, audit readiness, and what are the benefit of audit, and why they should do audit, why they should go for more robust financial control in their business, and what are the benefit they're going to get out of it. So that's a brief, again, topic for the today's discussion. So I'll move my next slide. Yeah. My next slide is brief about me. So again, my name is Debraj. I'm the managing partner of Fin Audit CPA. I'm a chartered accountant from India, as well as I'm a US CPA. And I've got deep experience in managing audit, US GAAP accounting advisory, mergers acquisition advisory, lease accounting, IPO advisory. Okay. And along with my partner, I started this company, Fin Audit CPA, 2 years back. Prior to this, I was working with Big Four consulting like PwC and Deloitte, helping companies in India and US for their US GAAP advisory, mergers acquisition advisory. That's very brief from my side in terms of who am I, what's my skill sets. Okay. Now I'll move into my next slide about the intro of my partner, Anil Gandhi. Anil,
okay.
over to you.
Good afternoon, everyone. Good evening. And thanks for joining. And today with Deborah, we are here to share our experience and knowledge with all the audience here. So about me, I am the I am the partner for the Fin Audit CPA, and I do also run AG FinTax. So altogether, it's I have 20+ years of experience in the core tax, finance, audit fields, And earlier, I worked for Amazon, Starbucks, PricewaterhouseCoopers, and Sun Edison. We are based out of Frisco, and I have been serving as a Forbes Finance Council member. And AZ FinTax and FinAudit both are under the same management, but as a reporting requirements, we need to maintain two separate organizations, one for audit, one for accounting and tax. That's what we are doing it. But through our AZ FinTax, we do tax planning, tax filing, accounting, bookkeeping, CFO services. And I am also a chartered accountant from India. I am also expert on understanding both US laws and Indian tax laws, and also helping on moving the repatriation of funds between both the countries. Yeah. Thank you. Go ahead, Deborah.
Okay, thanks, Anil. I'll move next slide. We will talk about again what is FinAudit CPA, okay, and your strategic accounting advisory partner, and again what we do and how we can help you in your business, and why FinAudit CPA. Right, we are a specialist CPA firm supporting real estate investors, startup, transaction driven business with the audit ready financial and strategic insight. So from FinAudit CPA, we have got a number of years of experience in advising real estate investors, startup in their day-to-day financing, day-to-day transactions. Okay, we have a very detailed team or very experienced team in India with chartered accountants in Hyderabad and in Delhi, who has got very good experience in preparing financials for the real estate company, advising the real estate investor, real estate owner to understand their financials and helping them in taking the strategic decision making. So what we do basically, we help all the real estate company in preparing the financial statement under the US GAAP. So for example, when you are a small company, you might have started on your own money, right? You don't need to think about the accrual basis accounting, US GAAP financials. But when you want to go big, you need to raise money from the investor, lender, borrower. They would first thing ask you to prepare financials under the US GAAP. And by GAAP, I means the generally accepted accounting principles. So unless you prepare the GAAP-based financial statements, those financial statements will not be understood by the investor, borrower, or the lending community, and they will not be ready to invest in your project or in your business, even though you are doing really good. So I always help, I would say me and my team helps the real estate company in preparing the financials under the US GAAP, and so that they can be ready for investor. Next part, when you want to raise money from the investor or when you want to get loan from the borrower, they would ask the financial statement to be audited or reviewed or compiled by an independent CPA. Why do you need this? As a management, you always think your company is doing well. You will prepare a best position financial statement in front of the investor, right? And those investors will not have any day-to-day oversight of your company, of your financials. So they are not 100% sure whatever you are presenting are accurate. So they will always ask an auditor, US CPA, to audit, review, and provide them an opinion whether your financial statement provide true and fair view of your business. Okay, so that's why you need to it's always good to have your books audited or reviewed or compiled by an independent CPA and present to the investor community. Third thing, for tax purpose, it's always to get your books audited for both federal and state. Next part, M&A accounting and due diligence. For example, you want to acquire any other project, right? So before acquiring, you need to understand whether the financials are making sense or not. It always look very easy upfront, but when you go deep dive and look through the financial, you can find out many details. For example, right, whatever expenses they are showing, are they accrued properly? For example, there are many expenses where, in a very simplistic term, invoices comes quite later point of time, right? So, but if you follow a cash basis of accounting, that the expenses will not be accrued in the books. So at the time of acquisition, you will not get an idea how much accruals are missing in the books. So you might end up having a wrong decision if you do not do a proper due diligence of the books of the account before the acquisition. So this is very high level. We'll go to the detailed slide and explain you on each of the topic. Next thing, we always do the outsource accounting and virtual CFO. In this part, I've got my partner Anil Grandhi, who has got a quite a detailed and quite experienced team in Hyderabad, who comes into a picture and provides you the outsource accounting virtual CFO services. So, and why you need to have a virtual CFO? You need to understand, right, whether your financials are whether your business are doing good business or not, right? Whether they are making profit or not, whether what is the year-on-year growth, whether all the expenses are booked or not. You need to have a virtual CFO who can understand your business and explain the financials or the performance of your business in terms of a financial in a very simplistic term, so that you can take the right business decisions. Next comes on the technical accounting. For the construction business, the accounting looks very simple, but which is not the case. For example, you need to look through all the project, you need to assess the performance and then recognize revenue. So that comes under the technical accounting part under the AC 606. The last one is the SOC and ISO audit. We do a lot of cyber security audit. If you need any cyber security compliances, you can approach us. And why, again, FinAudit CPA? FinAudit CPA, we have a deep experiences in helping P and VC-backed companies. We are quite transaction focused. We have assisted many of the companies in raising fund from the market. Okay. And also we have a senior level of people who has got hands-on experience. And also we are local, but as well as global. That provides us the fast, flexible approach. So we always come as a trusted partner beyond compliances. So this is how we can help you. Anil, do you want to add anything here?
No, we are good. Thank you. Go ahead.
Okay, I'm moving on to the next slide. And this is the brief agenda, which I'm going to cover in the overall course of this webinar. First topic, we'll be talking about the cash versus accrual accounting basics. Okay. Then we'll talk about what are the impacts on the financial statement. Fourth, again, why should you strengthen your internal control? Fourth, again, improving audit readiness. And fifth is the importance of the audit. So first topic, everyone, I want to cover key differences between the cash basis of accounting and the accrual basis of accounting. So first thing, why you do need an accrual basis of accounting. I was working with one of the reputed real estate company based out of Texas, based out of Plano. He wants to raise fund from the market. He wants to make a bond issue in the market for his construction company. And from the bond issue point of view, it is mandatory to have your books of accounts audited. And for the audit of the books of accounts, you must prepare your books under the accrual accounting. So for example, so basically, if you want to grow, if you want to get money from the market or from borrower, if you want to raise bond, it is mandatory to have your books under the accrual accounting. Now I'll highlight the brief difference between the cash basis of accounting and the accrual basis of accounting. In the cash basis of accounting, name suggests it is as and when we receive the cash, we recognize revenue. Right? For the expenses, whenever we pay, we recognize expenses. The name suggests it's very simplistic and intuitive. It is common for a small businesses, but it is not ideal when you are in a growth path or when you have a big aspiration. So first thing on the revenue, I'll talk about what is revenue in terms of the accrual. Forget about construction. Revenue under the accrual accounting means revenue should be recognized when it is earned. For example, let's give a very simplistic example of airlines company, right? When you book a ticket for an airlines company, at the time they receive the money from the airlines company's point of view. But it is not a revenue from their point of view. It will be revenue when they will be fulfilling their obligation of completing the flight for you. So they will keep the money as an advance and they will be recognizing revenue whenever they will fulfill the obligation of providing the flight services to you. So that's very easy example of the revenue when earned. For the construction company, you need to have all of your live projects going on, and we need to assess to what extent percentage completion has been achieved for the particular financial year. To what extent your percentage completion has been achieved, you are allowed to recognize revenue, and that portion of the revenue is earned, and that portion of the revenue you are allowed to recognize. under the accrual method of accounting. So if I have to give an examples, right? For example, very simplistic way, you have a project of, let's say, 300 million for the 3 year, and out of which your estimated cost is, let's say 150 million. Okay. So on the year one, let's say you have incurred 50 million in the year one. So your percentage completion would be 50 million divided by 150 million total cost base. So it is 1/3. So out of, again, 200 million to 300 million total construction value, you have earned 1/3 revenue. So you should recognize 100 million revenue on the year one, irrespective whether you received any cash or not. So why it is important? For example, if you receive the whole 300 million in year three under the cash basis, under the cash basis, all the revenue will be in year three. But on the accrual basis, it will be recognized every year based on your percentage completion, based on the work completed, basically. So that will actually reduce year-on-year fluctuation on the revenue recognition. So you will not have yearly movement in your revenue. You will not have yearly movement in the profit. So for example, when you recognize the whole 300 million revenue in the year three, you have to pay the whole 300 million tax in year three. Vis-a-vis an accrual method, you will accrue over a period. Your tax expenses will also be evened out over the period. Next point is expense when you incurred, right? So what that means, for example, you are following January to December calendar year. For example, for all the December bill expenses like your rent, your let's say telephone, your electricity, utility, all the invoices will be coming in January, right? But you have consumed, right, all those expenses. So in the accrual basis, it says you need to recognize all those expenses as on when you incur. So you know the estimated amount, you know the estimated bill. Based on the estimated bill, you should book the expenses. So that also is a classic example. It avoids your profit volatility. So for example, you're a construction company, you have to pay the bulk amount to your contractor, let's say after 1.5 years. But whole 1 year, right, you have worked on the contractor. So you should book based on the amount performed in your book as an expenditure, so that you can get to know year one how much revenue you earn, how much expense you incurred, and that will help you to find out the real profitability of your business. Third point, obviously, it talks about the matching concept of income and expenditure. So basically, whenever you're earning the income and to what extent resources consumed, to what extent expense you incurred, you should book in your financials to find out the real profitability of your organization. So last point, definitely it is required for all larger company or the growing company. If you have an aspiration to grow in the market, it obviously, it's always better to have your own fund for the construction. But in real life, you would need an investor, you would need a lender, you need a bond issuer to fund your project. So for that, you definitely need to have the books under accrual method, because you have to present your financials to the investor, and those investor will not understand until unless your books are prepared under the accrual accounting. And accrual accounting is the first basic point of preparing books under the US GAAP. So yeah, key difference I have talked, it removes the time of the recognition, profit volatility, it erases out. So it provides you the economic reality, and obviously it improves the reporting accuracy. I will tell you one real life case. Okay, I'm currently working with one of the real estate, quite significant player in the Texas market. Again, he came back to me that he needs books to be accounted. First instance, we found out that they are doing basic bare minimum accounting for the tax purpose, which is the cash basis of accounting. Now he wants to raise the bond. For the bond issuer, it is mandatory to have your books accounted. So for the books accounting, at the first step, you need to have your financial prepared on the accrual accounting. So I'm assisting him in converting his book from cash to accrual. So for example, if you have a plan, instead of waiting for the last minute, it's always better you again think for the long-term picture, long-term view, and convert your books from cash basis of accounting to unlock the hidden potential of your business. So I'll move into the next slides, right? Why choose the accrual method of accounting over the cash basis? I talked briefly in the previous slide, and I'll go with more details, right? So first point, accurate financial picture or misleading profitability, right? On the cash basis of accounting, you will receive, again, you will recognize revenue whenever you receive the money from the sale of your plot, sale of your flat, right? So for example, all the construction company takes years to build the property, right? All the years, at least more than 1 year, it will take 3 to 4 years to build flat, to fill the residential complexes. So if you follow cash basis of accounting, you will be recognizing all the revenue after completion of the project, right? Let's say it is 3 to 4 years, right? uh, while in accrual accounting, you will be recognized your revenue based on the percentage completion of the project. And for the percentage completion, it will be nothing but the amount of expense you incurred in proportion with your total estimated cost for the project. So you will be recognizing revenue over the period. So that will give you accurate financial picture, right? So you will be accruing all the expenditure. For example, so, any contractor is working for you, and as per the payment schedule, you would make him a periodic payment, let's say after 6 months, right? And which falls, let's say if you're following January to December calendar year or financial year for any company, the payment will happen in let's say in March for the September to October period. But you have already worked with that contractor for September to December. So, and you have consumed his services, right? You should accrue those expenditure in the December financial year so that it can provide your accurate financial picture. But in the cash basis, entire amount will be recognized in the next year. So just think from the investor point of view, right? Whenever you are doing a cash basis of accounting, he doesn't know, right? For example, at the end of December, you are showing a profit, but there will be a hidden expenditure or hidden, there are commitment of the expenditure for which you already consumed services, which has not been recognized in the books. The expenditure you need to pay in, let's say, after the year in January and February. So in the books, you might show a higher profit, but that profit will not be accurate because you have a still commitment to pay the expenditure in January and February, which are not recognized in the books, right? That's why I'm calling the cash basis of accounting is misleading in terms of the profitability. And none of the investor, none of the bond issuer accepts the cash basis of accounting. So if you want to grow big, if you want to have a big aspiration, it is mandatory you move to the accrual basis of accounting. Next topic, matching of the revenue and expenditure. So basically in the accrual accounting or in accounting world, it talks about whenever you earn revenue and whatever expenses you have incurred to earn the revenue, it should be booked in the same financial year to have the matching concept. And that provides a complete picture of the financial statement, whether how much profit you make, right? In the cash basis of accounting, that matching concept is not existing at all. So even if you show a profit for a year, that is very misleading. And also it will create a huge fluctuation in terms of the revenue recognition, in terms of the expenditure booking. So your tax expenditure will also be quite uneven over the period, right? Next point, again, third is the better for decision making. So why I'm talking about the decision making? Once you know how much expenditure, right, you need to pay in the subsequent period, that will always give me a better control in terms of your financial, in terms of the decision making of your business, right? You will get to know in a better way about the financial health of your project, right? Whether that project is making money or whether you are burning money, right? Until you again account for all the expenditure in accrual method, you will not have any clue, because on the cash basis of accounting, you're not focusing whatever has been consumed, you are just focusing what needs to be paid. So that's why I follow everybody to have two things. One is your accrual profit and loss, as well as cash flow statement, to find out how much you paid and what's your actual profit in the books. Third thing, obviously, raising for fund from the investor, it is a mandatory to have the audit, because without audit, your investor will not have a confidence whether you have a sound internal control system, whether your books of accounts are maintained accurately or not, okay, and whether Basically, in real estate world, it is generally managed by syndicates, right? Out of 8 or 9 investor, and out of which one they appoint generally one manager. So once you have the syndicate sort of thing, it is always better to have an audit to give a full picture in front of your investor that books of accounts are being maintained accurately, all the expenditures are being accounted for, there is no siphoning of the fund, the business are managed in terms of the best interest of the company, and no funds have been diverted for the personal use of any of the managers or any of the specific investor. So it is always advisable to have books your audited and present those audited financials to the investor, and that will boost up the confidence. So here I want to talk about one more thing. There's a three concept basically. One is audit, one is review, and other thing is the compilation, right? So audit is a detailed scope of the review from the statute point of view, where I will be going through your again balance sheet, profit and loss, cash flow, and will be provide a complete opinion that books of accounts are prepared under the accrual method and represents true and fair view of the financial position. The review is slightly less in scope as compared to the audit. That talks about mainly reviewing of the balance sheet and looking at the P&L from more of an analytical point of view. If we find anything wrong from the analytical review, we will go deep dive and find out. Compilation is much lesser in scope, where we will be mainly focusing on the balance sheet, and we will provide a compiled financial statement for your investor. Yeah, now I'll move into the next slide. Okay. So again, I'll briefly touch, right, why we choose accrual. Obviously, once you are building a large portfolio, you must have it. Next, presenting financial to your investor. Next, again, if you're planning to go for any acquisitions or any again any demerger or any sell off of your projects to anybody, you must have your audited financial statement before you complete the transaction. So yeah, I'm moving to the next slide. So what are the impact? Obviously, I talked many of the points in my earlier slides. I'll go very high level here. Okay. So what are the impacts on the financial statements? So it definitely, it helps you to remove the revenue fluctuation when you are preparing your books under the US GAAP and under the accrual method. It helps you to recognize revenue evenly over the period of the project based on the percentage completion. Vis-a-vis in cash basis, you recognize revenue once you receive, right? So particularly in the construction business, it is really meaningful as compared to let's say FMCG business, where they receive, it's a small amount you receive and you recognize revenue. It's not a much significant difference. But if you look at in the real estate business, the sale of the flat, sale of the commercial plot, sale of the land will take place after 1 to 2 years, or even after 3 to 4 years after completion of the project, right? So if you do not recognize the revenue, all of your expenditure will be kept and you'll be booking a loss. And once you sell the flat, you will be recognizing revenue for one particular year, right? And then when you sell the flat, you will have quite a higher amount of profit. And the year in which you are not selling the flat, you will have a loss book. So that will give a very, again, uneven financial position in front of the investor. And that will give a revenue fluctuation, that will provide the profitability fluctuation, and the investor will not get the true financial picture of your project. So next thing, I'm talking about the balance sheet. What we generally present in the balance sheet, we present all of your assets and the liability in the balance sheet. And why it is important from the investor point of view. From the investor point of view, balance sheet provides the state of the financial position as of the closing date of the financial year. So for example, how much cash you have got, how much land have you got, how much liability, how much accrued expense you have got, right? So for example, how much the amount of cash you have got will be sufficient to pay the bills of the accrued expense in the subsequent month or not, right? How much working capital have you got? Whether the funding have you got to sufficient to fund your working capital or not, right? So all this financial position they will get to know from the balance sheet. Same thing, for example, what are the bases of your asset? What are the land value of the asset, right? At what point of time all those lands are being acquired, and whether the land has got what are the fair value of this land, whether the land has appreciated or whether the land has got any depreciation in the value, which is very rare in the real world, until unless again your land is very close to, let's say, volcanic eruption or very earthquake prone area. The land value generally appreciate, but as being from the financial statement point of view, we need to state the fair value of the land or your building, all of your assets. So from the investor point of view, they will get a fair position of your assets and liability as of the balance sheet date. So from the investor point of view, they will always want to know your financial condition as of the reporting date, whatever money they invested, right, are making sense or not, whether they're going to recover their investment from the sale of the flat or not, right? So they will always be looking for fairly presented balance sheet as of the reporting date. So, what typically issues happen in the real estate world? Many of the time it has been seen, I have seen from my limited experience or of last 15 years, the syndicates are being formed and managers being appointed. Manager can be ethical, manager may not be ethical, right? You cannot trust blindly to the manager. So, God forbid, right? If your manager turns out to be unethical, then there are significant chances of siphoning of your fund, money being diverted from the business account to the personal account of the manager, right? And as the investors are not involved into the day-to-day operations of the business, they will not get a complete view of the financial position. So in those scenario, it is always advisable to get your books audited to find out the true performance of the manager, and whether the manager is working in the best interest of the project or not. And this is not uncommon, particularly in the real estate area, to not to have a good or ethical manager. So we end up getting many instances where some of the investors coming and again asking us to do a complete due diligence, complete forensic audit of the real estate project, and provides a report whether the projects are being managed in the best interest. Obviously, I'm not going to name any situation because these are all client specific confidential data, but these things happen when you are in a syndicate, and when you are in a company of 10 different people, one people might turn out to be unethical, and that can lead to the whole project in jeopardy. So it's always better, you need to have a proper checks and controls in place, proper audits done, so that you can find out what works are done by manager are in the best interest of the project. In the financial world, there is a very good concept of maker and checker. Basically, the person who is making should not be a checker. So you need to have an external auditor who can do the checking and again maintain the ethical part or maintain the accuracy of your project. If you don't do it, we all are human being. If anybody finds there are loopholes in the internal control system, that people are going to take benefit of it. So for example, if you look at in India, like Reliance, all the startup company, they start very slow. Or maybe let's say the retail company, they start very, very low on as an individual owner. When they grow, they generally build up a very strong internal control system, right? They are relying on people, they are relying on store people, and they are relying on the logistic people. They build a very good internal control system so that no individual can commit a fraud. Even if they commit, there will be a chances to catch hold of it and take appropriate actions. So once you're growing, it's always advisable to emphasis on the control and keep a proper checks on the, again, working on the financial transaction of your project to avoid any big loopholes or big fraud happens in the future. Yeah, I'll stop it here and we'll move on to the next slide now. Yeah. Yeah. Now again, I touched briefly about the control aspect, right? So it's once you are growing, it's always important to have a proper control system, and and that control system to reflect that you have a sound internal control system on the financial reporting. So basically, what happens? I talked about the lack of oversight, right? You, you are an investor, you don't have a time, and the manager is managing everything, right? So until unless you have a proper review mechanism, proper checks and balances, right? So it's all human nature. There are chances of fraud, and I'm not blaming any individual until unless you build a good system, good control system, good checks and balances. These things are bound to happen. Next point, manual process prone to error, right? Once you are process, again, if you've done from your side, you are doing from a singular point of view. It's better is are being assessed by an external party who are helping or assisting other multiple clients to check your processes and validate those process, so that if even if there error happens, somebody needs to check and correct those error. Third thing, very important, inconsistent documentation, right? So for example, it's not uncommon when you have a manager who is responsible for the project and doesn't have a proper oversight. They are bound to again make expenditure without proper documentation. So by documentation, I means you need to have a proper hierarchy of the approval. For example, set amount, let's say below, let's say $1,000, the manager have an authority. Let's say any significant amount, let's say anything above 5,000 or $10,000 needs to be approved by somebody from the investor community. You need to have a proper expenditure approval matrix. And also the generally we advise the expenditure and the bank payment needs to be done by two different person, or bank needs to be controlled by one of the one or two investor to avoid any sort of fraud to take place. So we need to have a expenditure approval matrix. You need to have a control matrix within your organization, and you need to have a proper documentation for all of your expenditure. Obviously, and also I have seen the system integration. By system integration means different people working on different systems and they are not talking each other. So best advice would be use something like a shared drive, MS365 sort of a platform where all the data are stored in one platform, so that if all the data can be integrated. So what we suggest basically, for the strengthening of the internal control. First thing, as I talk about the segregation of the duties, right? For the expenditure, you need to have a proper approval mechanism. You need to have again, the person who is again expending the payment should be done by a separate person, so that the fraud cannot be done by one individual. And next thing, you need to have a proper approval process. Without proper approval process, if you leave everything to your real estate manager, frauds are bound to happen. You need to have an oversight from the investor point of view. Third thing, you need to have a regular reconciliation of your bank. You need to have a regular reconciliation of your payroll. You need to have a regular reconciliation of your contractor payment. And fourth important part, you need to keep all the audit trails, right? Whatever money he has spent, what are the invoices they have spent, what are the voucher, everything needs to be kept in one shared folder. All the bank transaction, particularly in the real estate, needs to be reviewed. And we have seen in the past unethical managers diverting fund from the project fund to some banks in Dubai. So it's always mandatory, or it's always advisable to keep a proper audit trail of all the financial transactions, whatever are being incurred, to have a proper books of accounts. I'm moving to my next slide. Yeah, next slides, I'll talk about the importance of audit, right? So first thing, it enhances credibility with the investor, because very simple, you are a management, you are preparing your financial, you always will show the best picture of your company, of your real estate company, but it may not be the case, right? So it's always advisable a third party CPA comes, reviews your financials, provides an opinion whether financial represent true and fair view of the position in terms of the P&L, in terms of the balance sheet. And once you have the CPA, it was signed by a CPA, it always increases credibility with the investor because it proves that you have prepared your financials. An independent CPA without any connection with the real estate company have reviewed and provided a report on the true and fairness of the financial position. And this increases in the minds of the investor. Next point is the financial transparency, right? Once you have your audit trail, once your books are prepared under the accrual method, your revenues will be recognized periodically, your costs will be booked in the year when they are incurred. So that will give a proper year-on-year financial position, proper tax accrual, and that will increases or improves financial transparency. Third thing, identifies risk and the inefficiencies. So, for example, as a part of the audit, we need to review the internal control of your organization. We need to look what is the control over the financial reporting, who is approving expenditure, what are the approval mechanism, whether one individual owns the absolute power in expending, whether those funds are being again expended in the best interest of the project or not, right? Those things will be looked into the audit that will highlight any key risk and inefficiencies and will highlight to the management for proper remedial actions. Next thing, once you have your books of accounts audited, this can be presented to the VC fund investor, so that will help them for the decision making. Even from your internal management point of view, right? Once books are prepared under the accrual method, for example, a certain expenditure you have not paid, but you have consumed your services. Those money you need to spend, you need to pay very soon after the month end, right? Even if you have a cash, you will be setting aside those money for the future payment. So that will help you for the proper cash flow management. That will help you in your better decision making, so that you can avoid letter of credit or bank finance, unnecessary bank financing. Unless you control your expenses, you will end up having the letter of credit from bank, and that will come with quite a high interest rate. To avoid that, it's always better to control your expenditure. And to control your expenditure, you need to look at your accruals only. Yeah, I'm moving to my next slides. Okay. So what are the benefits of particularly for the real estates, right? So obviously it will help you in gaining your investor confidence. It will gain you finding the investor. It will increase your operational efficiency, and it will increase your financial transparency. I'm going very high level because I have talked about all this in my previous slides. Yeah, another thing I need to mention, all these parts from again, AG Fintech's my trusted partner. They will come and help you in preparing your books under the accrual. And once books are prepared under the accrual from FinAudit CPA, I will be doing the audit and getting you complied with the audited financial statement. Both AG Fintechs and FinAudit CPA are under the same management, but to keep it independent, we operate under the two organizations. Yeah. Next part, improving audit readiness, right? So again, I'm working with one of the reputed real estate company in the Plano area. So first we need to prepare all of your revenue, all of the project, and we need to prepare the percentage completion. To what extent you have prepared your books, to what extent expenses you have incurred, right? So we need to prepare accurate record. We need to prepare all of your percentage completion for all the projects, so that we can recognize revenue. Whether we need to look all of your expenditure, we need to ensure all expenditures are being accrued in the books. We need to reconcile your accounts properly. We need to prepare draft financial statement under the US GAAP. We need to again prepare complete notes to accounts under the US GAAP and make you ready for the audit. And we need to also look into your internal control system, help you in drafting your internal control system, so that in audit, there is no issue being flagged up by the auditor. So this is very high level in audit preparation checklist. You need to have your trial balance finance, and then trial balance needs to be mapped to the financial statement. We need to prepare the supporting schedules to match with the financial statement in terms of, again, what are your fixed asset, what are the, again, cash and bank balances, what are your account receivable, what's are your percentage completion of the revenue, what's your WIP, AR, what are your liability, right? You need to prepare the complete supporting schedules. Okay, and to do that, we need to look at your all of your contracts agreement and ensure all are being accounted in line with the legal contracts, legal agreements. The fourth thing, obviously, we need to help you in drafting your internal control documentation. Yeah, next thing, again, conclusion, right? Why you should choose the right accounting method, right, which is the accrual. Next thing, obviously, strengthen your control continuously, so that again, there are no frauds being committed, so that there are no signing of the funds from any individual from the business to the individual bank's account. Third thing, get ready, and obviously leverage audit for your business growth. The last point, how can we help you particularly? Yeah, we have a deep understanding of the property development life cycle. We have a deep understanding of the real estate financing structure, and we are working with multiple real estate clients at the moment, right? And so we have got a significant experience in assisting real estate company in preparing accrual accounting, in doing audit for the real estate company, and helping them for the audit readiness. So we have a detailed business knowledge. We understand your problem. We understand how you operate, right? So we are in a best position to help you in preparing your books under the accrual method, help you for the audit readiness. Once that is done from AG FinTech side, from FinAudit, I'll be ensuring you the audit with a minimum disruption, so that you can scale your business. I always tell you, focus on your business from finance and accounting or the compliance side. FinAudit, CP, and AG FinTechs will help you to be compliant, to help you in proper decision making, so that you can grow your business, and you can grow your business without any disruption. Yeah. Before that, Anil, do you want to add anything here? Any other points?
Yes. Okay. So we work so hard to build the businesses, but at the same time, we need to ensure that we are being in compliant with the local regulations, maintain the proper books of account. After all the effort, if even we fail something somewhere because we are not focusing on managing the books or financials, we get into the challenges. And when we raise funds from the public, it's our responsibility as a sponsor for the project. It's the responsibility to give an assurance to the investors that the numbers are accurate. We are maintaining the books appropriately. If maybe every quarterly once giving the financials to maintain the consistent, to maintain that assurance. And this also gives a lot of boosting on the boosting and confidence to the investors to invest more in our projects, not only for this project, even in the future projects. Right now, we are helping few people in Dallas area. So by doing an audit for all their syndicate companies, syndicate investment by real estates, so that now, as you know, now these days, raising the funds from the public on the syndicate platform is not easy because of a lot of challenges people are going through that. So now what few successful builders, developers, syndicators are doing is they are doing all audits on existing projects and informing the upcoming new investors, saying that we are going to maintain a transparent, accurate books, and also we do also share an audited financials every year, and we do share every quarter a financial statements. So that is how they are trying to get and retain the investors' confidence. So definitely, and for the real estate industry, it is audit, assurance, audit, and maintaining the proper books of accounts are very, very important. And from AG FinTax and FinAudit perspective, if any audit requirements, FinAudit takes care of it. Any accounting, bookkeeping, CFO services, AG FinTax can take care of it. But we're happy to help you as required. And we are in Frisco. At any time, you can stop at our office also, and we can discuss in detail as required. Thank you. And we will be sharing your contact details in our WhatsApp group and also over the email after this session. So feel free to reach out to us or schedule a meeting. Deborah, can you share your calendar link?
Yeah, I'll share the calendar link right after the meeting.
Thank you. Thank you very much. Thanks to REF for giving this opportunity.
Yeah.
And you can see all our contact details also. You can reach out to us on the email or over the phone, or you can just schedule a quick meeting with us, and you can shoot us an email or call us. We will send a calendar link to schedule a meeting. And thank you very much to REF and also Lillian and to Deborah also. Yeah.
Yeah, just before, if
Thank you,
anyone has,
Devraj. Thank you, Anil.
Lillian and Vineet, are we open for the Q&A session or I don't know?
Yes. Does anybody have any questions?
So we have got 8 minutes left. That's what I stopped around 10 minutes before. If anyone has got any question, I'm happy to answer. Me and Anil will take up the question.
Also, if somebody wants to, if you can turn your mic off so we can answer questions directly.
Sorry, are you asking me, Lillian?
Oh no, anybody in the still on the webinar that has a question, just feel free to turn your mic off and ask away.
Yeah, I'll stop presenting now. Okay. And so that I can see the questions. Okay.
Okay. Well, thank you both so much for your time. I really appreciate it. And if nobody has any questions, we will conclude today's webinar. Thank you guys so much. That was very thorough. I was going to ask some questions, but you guys covered so much of it so thoroughly. So I appreciate your time, and I look forward to seeing the connections that y'all make through this webinar.
Certainly. Thanks, Lillian. Thanks, REF Forum, for the opportunity. So yeah, you have got my number, Anil's number. Please feel free to reach out to us if any of you require any details. We'll be more than happy to help you and again assist you in all sort of your queries. Yeah.
Of course, and this is also going to be on YouTube. So if you think that you can forward this to a friend and a colleague, look out for it on the Real Estate Forum YouTube channel as well. And we look forward to seeing you at the April 2nd REF event in Salina. All right. Take care, everybody. Have a great rest of your week.
Thanks, Lillian. Thanks, Anil. Thanks, everyone, for your time. Bye now.